Mr. Wallace: in buying a company, do you confer with management to obtain information about the company which is not generally available? Mr. Graham: well, where the purchase was made by agreement with large stockholders who are part of the management, we would ordinarily say get a copy of the audit report and material of that kind which is not published largely. I think because it is just a matter of inconvenience to publish it, but I should add, in order to avoid a misconception, that I can think of no instance in which we have gotten information of importance which had any effect on our judgment, which information was not given to the stockholders in connection with the offer to buy. Mr. Wallace: to the degree that the reports are published quarterly, you might get a report on earnings in between these reports, for example, which is not published. Mr. Graham: well, that is conceivable, a monthly report, but it would be very unusual if it had any effect. I might give you an example of that. When we made our offer to purchase the Atlantic Gulf and West Indies stock, and incidentally, I might say the offer was made through the Manufacturers Trust Corporation, we published, and I think at the suggestion of the Securities and Exchange Commission, with whom we had discussions on this matter before, a semi-annual balance sheet which had been supplied to us by the management and had not been made public. It did not give any particular information of value, but it was published as a matter of general policy. Mr. Wallace: in general, when you buy a block of stock, do the people from whom you buy the stock have the same information that you have? Mr. Graham: as far as any important pieces of information are concerned, I would say yes. Mr. Wallace: but if you were to buy stock on the open market on the basis of information that you had gotten conferring with management, would this be considered trading on the basis of inside information? Mr. Graham: no, sir, because as I understand the interpretation of the rules, trading on the inside information applies only to those who have fiduciary relationship towards the stockholders, namely officers, directors and major stockholders. Mr. Wallace: is it not illegal for an officer of the corporation to divulge to you any inside information which is not available to the public? Mr. Graham: I would like to clear that point up a little bit, because I am on both sides of that fence. I am an officer and director of a number of corporations, and I think it is worthwhile for the senators to get a realistic view of the way corporate affairs actually operate. A good deal of information from day to day and month to month naturally comes to the attention of directors and officers. It is not at all feasible to publish every day a report of the progress of the company in the newspapers or send out letters to the stockholders. On the other hand, as a practical matter, there is no oath of secrecy imposed upon the officers or directors, so that they cannot say anything about that information which may come to their attention from week to week. The basic point involved is that where there is a matter of major importance, it is generally felt that the prompt disclosure should be made to all stockholders, so that nobody would get a substantial advantage in knowing that. But there are all degrees of importance, and it is very difficult to determine exactly what kind of information should or must be published and what kind should just go to the usual grapevine route. Mr. Wallace: of course, the SEC Act itself makes it illegal for an officer of a corporation to trade on the basis of inside information. The corporation or stockholders may sue to get their profits back. Mr. Graham: yes,